Welcome traders to another Tickmill trading update with me, Patrick Munnelly. We want to update the S&P 500 view using the emini futures contract and put together a trade plan for Friday's session. Now, noteworthy that today is options expiration, and to add to the volatility, we are seeing a global IT outage, which is causing some issues with pricing on some exchanges. So caution in terms of your sizing if you're trading today, because we can see some erratic price action on a normal options expiration, but certainly with this tech glitch, this that could exacerbate things. Anyway, moving to technical setup, starting with the weekly time frame, we are trading at pretty much sitting on the weekly five week volume weighted average price look back, and it's going to be important to see how we close today. If we get a close below the 55.80s, that will flip the VWAP bearish, and will suggest that we could see some further retracement to the downside. So pay close attention. Well, I'll be paying close attention to this weekly close. Certainly on the daily time frame, highlighted that we had already taken out the VWAP on Wednesday. We got some follow through yesterday to the downside, and we are now trading well below the 56.47, which would need to be reclaimed to turn the daily VWAP bullish again. So for now, it's in pullback mode. As highlighted on the Tickmill blog, Goldman Sachs funds flow update has highlighted that the 17th of July has marked a summer local top many times over, and we are seeing that potentially in play now. Note we've got this 3-day pullback. In bull markets, it's not unusual to see a 3-day corrected move before the trend resumes, but as we're heading into a seasonally weak period for the markets, the first 2 weeks of August are the worst 2 weeks normally for the markets. I would suggest that we could see some further downside, and maybe this is just the first leg here. If we move to our intraday timeframes, looking at the weekly plan, we tested into our resistance zone. We failed the bull bear zone, as I talked about in yesterday's update, and we are now looking for a move down into our target area of the 55.40s to 55.30. The intraday hourly time frame yesterday, I talked about the potential for a move up into what was our bull bear zone yesterday, into the 55.60s, 55.50s. Got rejected from there. I'm currently holding short positions myself, and I am now looking for a test into our target zone on the downside into the 55.40s, 55.30s. So in terms of the setup for today, what I'm looking for now is a resistance to be maintained here into the 56.15 to 56.25 area. So we've got a double bottom in place at the moment. We tested just below yesterday's lows, and have so far caught a bid. So I've been looking at any move back into that 56.15 area, 56.25 area, as another opportunity to engage on the short side. So watching for intraday exhaustion signals. Certainly delta divergence is a great tool that I use for that. And then I'm looking for this move down into our target zone, where I will be looking to book profits on short positions, and I'd be expecting at least a bounce back into the 55.69 area, being yesterday's low, and potentially back up into the 5600 to close out the week. Certainly with options expiration, they might try and pin it at that 5600. Any break, obviously, of the support down to 5502 would be a meaningfully bearish development, and then we could expect a move next week into test monthly projected range support down into the 53.80s. If we do get some momentum going into the cash session today, and we can get back above the 56.28, 56.30 area, then I could see us test back up into the range resistance for today, which is going to be into 5660 to 5670, where again I think we probably likely stall into the close. But my primary expectation is that we maintain some bearishness here and test into our weekly support zone. As always, traders, plan the trade the plan, and most importantly, manage your risk. Until next time, thanks very much.